All right, let's get a look at another big mover in today's action, and that's cruise lines. Some bullish calls out on the street, really spreading that optimism just in terms of the demand story for some of these stocks. Here to discuss, we have Yahoo Finance's Josh Schafer. And Josh, it was almost across the board here just in terms of some of the strength that we're seeing. Yeah,
so you saw upgrades from JPMorgan and Bank of America today coming out and upgrading. That was Carnival Cruise Lines that they upgraded. That stock closed up nearly 13%. And part of the strength they're seeing is just overall demand in cruise lines. Bank of America writing that the cruise recovery is, quote, now stable. They also highlight overall Bank of America card spending. I thought this was an interesting point. So Bank of America obviously aggregates their own credit and debit card spending. They said that travelers spent 17.3% more money in May than they did in that same month in 2019. So people spending more money on cruises now than they were pre-pandemic. And then when you take a look at Carnival specifically and why B of A likes Carnival, they also highlighted debt. Carnival had a problem of increasing debt going back to the pandemic, but they said that now that debt is actually more under control than it was before. Our Brian Sozzi actually recently spoke to Carnival CEO Josh Weinstein. I want to play a bite for you here.
Getting back a fortress balance sheet is incredibly important to us. We peaked at $35 billion of debt. I was very, very happy to say on our last earnings call, two very important things. Number one, we have no intention of issuing any more equity. And number two, we are starting to pay down the debt.
So Diane, obviously the key point that you hear there, peaked at $35 billion, right? That debt peaking, they're now coming on the other side of that. Bank of America, after talking to management last week, sees that obviously as a positive to have that debt coming down.
And I'm not surprised to see that, to see the upgrades. You know, last week I spoke with Royal Caribbean CEO Jason Liberty. He talked about demand for this year and beyond. Let's quickly listen to that.
Well, really, for the past couple months, and certainly right now, most of the bookings we're taking on is for 2024. So the demand trends that we've seen earlier in the year is very much flowing into 2024 and even into 2025.
Yeah, so we're seeing that play out in the numbers and Wall Street reaction to that. When I was on the ship last week, I mean, it was full. It was, you know, they said they're at 100% subscribed, over 100%. I said, how can you be over 100%? Two people to a room, basically.
It's been interesting to see that, though, also play out in these stocks to start the year, right? When you take a look at these three stocks year to date right now, you have Carnival up over 80%. You take a look at Royal Caribbean up almost 100% to start this year. So people clearly bullish on what they're seeing for bookings sort of out to end the year, right? Because that's going to come in earnings when we think about the end of 23. And then obviously, as you were just saying, 24, 25. So it seems like overall positive for the cruise line industry. I don't know if I'm going to be going on a cruise anytime soon, guys. Not exactly my thing, but someone's booking.
I know, and I've been talking to more and more people as we've just been talking about the fact that there's nothing stopping this demand for the cruise lines. We've heard from all the CEOs at this point that it's not just the people who are taking cruises before. They're able to attract new cruisers. I still, though, haven't talked to anyone that's been on a cruise. So it's time for all of us to go.
I haven't been on one, but I will say the experience of actually like being on the ship made me interested for the first time ever.
And that's pretty cool. They have everything on board those ships these days. All right, Josh Schafer, good stuff. Thanks.